essential terms to know when investing in equities. Hello and welcome to BSC's Investor Education Awareness Series. I'm Siddharth Zarabi, and on today's chapter, we learn the essential terms that you must know when investing in the stock market. If you've just entered the world of investing, you may end up spending a good deal of time finding out the meaning of key terms used in the stock market. And while numerous terminologies are used, a few of them are frequently used, and we are going to cover those key terms in today's episode. So let's get started. The first term, and a very common term, shares. What are shares? Shares are a small part of a company that you own when you invest in it. Share prices change daily, and that depends on a variety of market factors. The more shares you acquire, the more ownership stake in the company you ultimately end up obtaining. Now, the second term, primary market. Now, a primary market is a marketplace where new shares are issued. These new shares are known as an IPO that you can buy into directly from the company. The second term, and this is a related term, the secondary market. We first discussed the primary market, we now discuss the secondary market. The secondary market is a platform where direct buying and selling of shares takes place between investors, between different groups, different individuals. Here, you need a broker to buy and sell these stocks. Next up, the term intraday. If you are buying and selling shares on the same day, it is known as intraday trading. Intraday traders do not purchase shares as a long-term investment. They don't hold it for a long period. But they do this to gain profits by understanding and tapping the movement of the share price during the daily market trading hours. Now, the bull market, again, one of the most famous terms attached to the stock market. This is a term used to describe when share prices are on the rise and investors are optimistic that the share prices will continue to rise and grow. A bear market, actually the complete opposite of a bull market. A bear market when share prices are falling and people are not optimistic about the share market, that's what is called a bear market. Now, a commonly used term, IPO, and we spoke about that when a new company or a privately listed company presents its shares to the public for the first time on a stock exchange. That is what is known as an IPO. Now let's turn to the term broker. A broker is any professional or an organization which is a registered member of the stock exchange, and it works as an intermediary on behalf of a customer who is directly buying and selling stocks in the share market, and that is what is a broker. Now, these were some of the most common terms involved in trading and investing. But since they are key terms in the share market that every beginner must know, I hope that we've been able to convey their meaning in a simple manner to you. And before I leave you on today's episode, I leave you once again with some great expert advice.
So the terminology comes from the antecedents of the market and the historical setup, which has told us, when you enter the market, what are the important terms and what are the market trends. Now, what is a bull and a bear market? When the market from a high falls 20%, an index or a stock or a commodity, it enters a bear market. And similarly, on the reverse, when an index, stock or a commodity rises 20% from a low, it becomes a bull market. The anecdote refers that till 20% of the fall, most of the optimists are still hopeful. But after 20%, it becomes a bear market. There is no point of, thinking of the bullish side. And similarly, in a bear market, all the pessimists get wiped out in a 20% rally. So if I could, give you an anecdote on these 3 months, when the Dow hit 18,375 and subsequently went up 3,600 points from there, that is when it breached 22,000 on the upside. It got into a very powerful bull market. Similarly, the Nifty from 7,500 when it went to 9,000 and above, all the pessimists got swept away, and the Nifty now has entered into a new bull market. So the pessimists will keep doubting the rally, but the optimists are saying that whatever selling power had to came within 20% of the rally. Similarly, when the index fell from 12,200 and it went below 10,000, it told you that you are entering a bear market, and then it went all the way to 7. So same is the case every day in a stock, in a share, in a commodity, or in a bond, and that's the terminology of a bull and bear market. Intraday means a trader who takes the morning 9:15 and 3:30 in the afternoon as the whole year. So he trades, whether he's buying or selling, he does all his profit and loss within that one day. He does not see tomorrow. He is saying that today is my 1st January to 31st December, and everything has to be played in that. He is not bothered about the next day, but he has to make money within that day. A good intraday trader is the one who carries home money or books his losses, but he survives for the next day. Long is an anecdote which says that you are bullish on the market, you are buying first. So how does a person make money? Either he is long, that he buys first and then he sells higher, or he goes short, that is he sells first and he buys later. In our exchanges, if you are an intraday trader, you can do both bull and bears. You can do long and short intraday, but there is also a subsequent derivative market called the derivative exchange, where you can do futures and you can carry forward your long or short position, but that will get too much into it. So these are the short acronyms which describe the trading habits or the trends of the market.